All right, GM, ladies and gentlemen, let us analyze what the market's going to do or what the market could potentially do. So, gold has been up for almost about 3 weeks now, 3 weeks of constant bullishness. And whenever something like this happens, I love to see when did this happen last time and what happened during that particular time. That gives me a basic idea, especially if the market is in an all-time high phase, and especially if the market is in an area where it is untapped or it has never been there before. It always helps me to understand what the market could potentially do, and that's what I like to do. So this is what looks familiar to me. 1, 2, and 3, consolidation, then up move. 1, 2, and 3, took out the highs, consolidation, up move. Then we've got 1, 2, and 3, consolidation for a very long time. 1, 2, and 3, consolidation. So I'm trying to see some pattern over here, and I personally don't see the market going up constantly for 4 weeks. We have 1, 2, 3, consolidation, sort of a volatile market, then 1, 2, and then consolidation. 1, 2, 3, 4, and this happened back in 2021. 1, 2, 3, 4, 5, 6, 7, 8, back in 2020. So one thing is clear, that what happens here normally is after 3 weeks of rally, gold gives us a volatile market. So for more clarity, what we can do is we can go to the daily time frame, right? So first, what we need to do is we need to mark out that particular area, which is our reference zone. So 1, 2, and 3. This is our reference zone. So go back down to the daily time frame to check, and we see that the market has been constantly moving up, and then the market started consolidating and started getting volatile. So from that angle, looks pretty familiar. Market has been constantly going up, and now there's a very high chance that the market will continue to give false breakouts, continue to give volatile moves. And this is where what you need to do again is you need to go back to the same prime example where you will get clarity of what you're supposed to do, which is this. So we go back there, we go to the 15-minute time frame to get more clarity. Delete this, and now we try to see the market structure. False breakout, price comes down, takes out the liquidity, moves back up, takes out the high, goes higher, gives a breakout. What time was this? So it was 11 p.m. in the night. Please note that 11 p.m. in the night. Price goes up again, takes a high, starts coming back down in the New York session. Again, false break. Price goes up, takes out the lows. Again, false breakout, liquidity sweep right here. Price goes up, goes down, takes out this liquidity. Again, sweep. Price goes up. Then price tries to go up, fails, comes down, sweeps the lows, price gives a false reaction, sweeps again, goes up, takes out the sellers, sweep, reaction, price tries to go higher and doesn't succeed, again basically takes out the sellers, sweep, goes down. And this is basically telling me that again, so it's very obvious to the eyes, you can see so many sweeps, so many false breakouts. So this clearly tells you that, my friend, this is a period where we can potentially see a lot of false breakouts, a lot of liquidity sweeps. So maybe this is a period where your breakout strategy can potentially stop working. And this is very, very important for you to understand, because if you keep applying the same strategy without analyzing potential market conditions, you will never be able to make money as a profitable trader. So basically this is telling me that what I should do is I should focus on liquidity sweep setup instead of my normal London session setup to be able to capture the markets much better. This is what it is telling me. right? So now I will know that London setup that I normally trade, the chances of that going in my favor is going to be very less. And in fact, what I should actually do is I should wait for false breakouts, and I should try to trade false breakouts. Now again, if I've not backtested that, if I've not traded that properly, then I will not be able to do that as usual. I will just be a clueless trader who will have no idea what I'm doing. So let me give you a potential idea. Okay, let's take today's markets for example. First of all, we can clearly see that the market is running bearish. Price try to make a high, came down, made a lower low, went up, coming down again, made another lower low, price tried going up, and then now it's coming down. So there's a very high chance that the price can continue lower from here. Now if the price wants to go lower, what can it potentially do in a volatile market? What can it potentially do in a false breakout scenario? What it can potentially do is, for first of all, what you need to do is you need to mark out resistance levels which most traders are watching. So this is a supply right here, this is a supply right here. So now what I need to do as a person who is smart, as a person who knows the market conditions and loves to analyze them, is I need to look for two scenarios. First scenario is false breakout, formation of support, break of structure, continuation to the downside. First scenario. Second scenario, price comes up, false breakout, formation of support, break of structure, continuation on the lower side. Second scenario. These are the two scenarios that I will be looking forward to, because first I have identified that the market structure is clearly bearish. The market is interested in going lower. Market has tried to make highs, but it has failed. And now, again, all the normal traders, all the newbie traders will be like, oh, you know what? The market is bullish. The market is bullish on the 4-hour time frame, 1-hour time frame, daily time frame, this and that. I should go long, and this is a resistance. I should go buy over here and all that. They're all going to be the liquidity. They will all become liquidity. So what I'm going to do is watch out for false breakout setups where the price breaks a particular resistance zone, forms structure, breaks that particular surface, and then continues lower. This is what I will be watching for at least the next 2 weeks, until the market proves me wrong. If the market says, you know what, I'm going to go trending, I'm going to go continue higher, which is also possible, I can always be wrong. That is the time where I will again change my style or change my approach towards the market. But even if that happens, let's say this is a resistance, you know, price goes up, forms a lower low, and then continues higher. Nothing happens. I don't lose. I don't enter in the first place, because that's not my setup. My setup is very simple. I'm going to give you an example again for more clarity. My setup is that price breaks a resistance, forms a surface like this, and when it breaks this surface, that is when I enter, or maybe when it retests it, that's when I enter. This is my setup. But if the market is going to continue higher, let's say the market does something like this, I do not enter in this scenario. So even if I continue with this approach, the worst case scenario is that I don't take any trades and I don't lose money, and I am where I was at the start of the month or the start of the 2 weeks, which is still fine by me. It's better than losing money, right? So this is going to be my approach, guys, for the month of October, or for the next 2 weeks at least, until the market proves me wrong. And I hope this gives you clarity. I hope this helps you understand how to actually read patterns in the market, how to actually understand what could the market potentially do, and how to decide your approach on the basis of that. And if you actually take this video seriously, trust me, it can change your game, because the market is always changing. The market is always changing its approach, its conditions, its setups. And if you learn how to analyze it like this, identify patterns, see what happened in the past, then your approach towards trading will get much better, and your chances of profitability will increase by a lot.